Hi, good afternoon, everybody. My name is Jared Lopez with Next Generation Trust Services. Thank you so much for attending. Today we'll be discussing the IRA LLC investment structure. With us today is Matthew Sorensen of KKOS Lawyers. They are located, they have offices in Arizona, Utah, and California. Matt, thank you so much for attending.
Thank you. It's great to be here.
So what I'm going to be doing is I'm going to give a brief explanation about self-directed retirement plans in the beginning. It should only last 5 to 10 minutes. We'll give Matt the rest of the time to discuss the IRA LLC investment structure that I know a lot of our clients and a lot of people that are interested in signing up for self-directed accounts are interested in learning about. So first is, what is Next Generation Trust Services? We are a third-party administrator for self-directed retirement plans, where typically with your IRA or 401k account, you're investing in stocks, bonds, mutual funds, CDs, things like that. Our clients are doing non-traditional stuff. That's the stuff they're not doing. With Next Generation Trust Services, we allow you to invest in a wider range of investment options, and we're going to be discussing that a little later. Next Generation isn't a bank. We're not a financial planning service. Basically what we're allowed to do is we're allowed to give a yes or no as to what's allowable within a retirement plan. And the plan is completely self-directed, so the investment options are completely up to you. We can't endorse or recommend any products. Basically, again, as I mentioned, it's just yes or no. You can do it in your retirement plan or you can't do it within your retirement plan. And what you want to invest in is 100% self-directed. So there are several plans that can be self-directed. The first is a traditional IRA, which is a write-off in your taxes in the current tax year. However, any earnings that you receive and the assets are tax-deferred. So presumably when you're at retirement age and taking the funds out, you'll be presumably at a lower income level. That's when you'll be paying taxes on the funds and any earnings that you receive. With a Roth IRA, you're paying, it's not a tax write-off, so anytime you're making a contribution, it gets added to your ordinary income. However, any earnings that you receive on that is 100% tax-free. So if I start my IRA this year with my Roth IRA this year with $5,500, and by the time I'm retirement age, I have $5 million. I made some great investments, but also it's 100% tax-free. The SEP IRA is for self-employed individuals. It is the same type of plan as a traditional IRA, which is tax-deferred. However, because you're self-employed, the contribution limit is much, much higher. Whereas with a traditional IRA in 2013, you can contribute $5,500. With a SEP IRA, it is up to $50,000 that you can contribute. There's also the simple IRA for small businesses, which is also tax deferred. Then you can have employer plans, such as a 401k, be self-directed. So there are a number of 401ks that we can establish where a portion or all of the plan is self-directed, so you can do these non-traditional assets. There are a few non-retirement related specialty plans that can also be self-directed. The Coverdell is for child's education, and that doesn't necessarily mean college. It can be books, uniforms, anything that goes along with education. Coverdell can pay that off, and that plan can be self-directed. And then there's also the health savings account, which is for medical expenses. That's something that you need to qualify for. It's only for high deductible health savings accounts. And if you have any questions on those, you can definitely give the office a call. So getting into the meat of the presentation a little bit is investments. So the easiest thing is to tell you what you can't invest in first. You cannot invest in life insurance, and you cannot invest in collectibles. And that's it. Also, the other dealings that that there are restrictions on is dealings with disqualified persons. These people cannot have any personal gain or provide any service to your IRA account or any investment that are held in your IRA. The IRA holder, their spouse, any ascendants, any descendants and their spouses, fiduciaries to the account, business partners, or people providing service to the account. So basically what that means, if you own a piece of investment property in your IRA, none of these people on the list of disqualified persons can provide any contracting work, even as much as mow the lawn or change a light bulb. They cannot live in that property, even if it's at a fair market rate. So if I own a property, my son cannot rent that out, or I cannot live in it, even if it's a part of the time. So once your IRA holds that property, all of these people become disqualified. But we'll get into different investment options now. So obviously we mentioned real estate, and that's any type of real estate. So if you want to wholesale, if you want to flip properties, if you want to buy and hold, all of that is allowed within an IRA. If you buy and hold, how it would work is rental income would actually be given to us in your IRA. If obviously you see on there LLCs, Matt's going to be talking about how to structure a single member LLC where your IRA is the owner. He's going to be discussing that a little more, actually a lot more, so I'm not going to really get into that. But there are other options: tax liens, mortgage notes, loans. You can make loans. Your IRA can make loans to a non-disqualified person at whatever terms you two agree on. Basically, you're becoming the bank, so that's a wonderful thing. Precious metals, hedge funds, and so much more. I'm going to just briefly give out my contact information. The number here is 973-533-1880. And my name is Jared Lopez. You can reach me at that info address, which is info@nextgenerationtrust.com. And if you have any questions, you can chat them into the chat box. We'll give it 1 minute before Matt gets going on his presentation. All right, thank you so much. Okay, Matt, I'm gonna pass it off to you. I know that you are located on the West Coast. What area are you in right now?
I am in what is usually sunny Phoenix, Arizona. It is raining today, but it is still 65 degrees and very nice. So I can't complain.
Wonderful. So Matt, your practice area includes real estate, obviously self-directed IRA law, and business entity formation, correct?
Correct. I probably spend about 80 to 90% of my time specifically helping self-directed retirement plan clients. And I do many different things, from advising them on their real estate transactions to establishing LLCs to I've represented self-directed IRA owners in tax court and before the IRS. So our practice in our office is pretty expansive with respect to self-directed IRA owners. We do a lot of tax returns for clients as well, those that involve self-directed IRAs. So we really work in this area extensively and help clients throughout the U.S.
Wonderful. Now, I just want to get in the first question, the question I received more than anything, and I don't know if you're going to be going over this a little later in your slides, is why should we use or why should a client use an ERISA attorney to structure this LLC as opposed to going with a self-directed IRA or 401k company that does it for you?
Well, I think what's happening in the industry is a lot of trust companies, third-party administrators are realizing that people need advice and need to understand how this is structured. And so what we do when we set up the IRA LLC, I do a consult with the client, go over what they're planning to do, advise them of the issues they need to be aware of. We issue them a letter that indicates that the entity was set up in compliance with the law, that we're taking into account the Internal Revenue Code and ERISA provisions that apply. But the LLC needs to have certain restrictions built into it. It is not a regular LLC. And so if someone sets up an entity on LegalZoom, or they have their brother who's a lawyer set it up and they're not familiar with the rules that apply to IRAs, that LLC is likely a prohibited transaction. And so it's important that it be set up properly, and there's an attorney who's familiar with the rules setting it up. I'm not the only one out there that sets them up and is familiar with them, but you want to find someone that is familiar with the rules, sets it up in compliance with law, and sends you a memo or letter indicating it was set up properly and is in compliance with law.
Wonderful. Thank you so much. And now you can get going on your presentation. Thanks so much, Matt.
All right. Thanks for having me. All right. Well, first and foremost, since I am a lawyer, I'm going to start off with a disclaimer. I can't help it. So I just want to make sure everyone's aware that this is just general educational advice. It doesn't constitute attorney-client privilege, this webinar, but I'm trying to give informational advice that you can understand your options and maybe decide to consult with an attorney before you engage in a transaction if you decide to do an IRA LLC. I'm a partner in our law firm, KQS Lawyers. We have offices in Irvine, California, here in Phoenix, Arizona, where I'm at, and then in Cedar City, Utah as well. Our websites have lots of information on real estate, self-directed IRA, small business, entrepreneurship. My partner, Mark Kohler, is a national best-selling author on asset protection and tax planning. My website, which is on the slides here, mattnsorensen.com, has a lot of articles on self-directed IRAs, on the IRA LLC, and so check that out if you want to get more information about self-directed IRAs and IRA LLCs. Well, let's just get started here, and I want to first just start out about what is an IRA LLC, and I want to make sure that we just outline it first. Some people call this a checkbook control IRA. I hate that word, but some people use that term. We call it an IRA LLC in our office. Then I'm going to go through some of the prohibited transaction issues that arise. I'm going to talk about what you can do if you're manager of this IRA LLC. And then I'm going to go through some structuring options as well on ways you can put multiple retirement accounts into the LLC, ways there can be individuals in the LLC as owners with the retirement accounts. There's a lot of rules that are somewhat hard to understand and might not be logical, but they're what the law is. So I'm going to kind of go over your options, go over some frequently asked questions, and then we will take questions finally at the end as well. So let me get started here on just what is a IRA LLC, and I've got my phone turned up as much as possible here. I'll try and speak louder if I just see in the chat windows people asking me to speak up a little bit or to turn up the volume, but I'm up as far as I can be. So what is an IRA LLC? A lot of clients will decide to use an LLC to purchase their investments as opposed to making those investments directly out of the self-directed IRA account. The easiest one that I'll go through throughout the presentation today is purchasing real estate with the self-directed IRA. Generally, if you have a self-directed IRA and you want to buy a piece of real property, you send your information to your administrator. You send the purchase contract, for example, and the contract's going to be in the name of Next Generation Trust Services, for and in behalf of John Smith, account number 1234. And that is going to purchase the property, and title is going to go in the name of your retirement account. When rental income comes in, the rental income goes to the retirement account. When you have to pay bills, the bills get paid out of the retirement account. So there's a lot of back and forth between you and your administrator in handling that investment. Now, for some investments, that back and forth isn't that burdensome, and it can work very smoothly. For a rental property or maybe real estate property that's going to be a rehab, there's going to be a lot of things going on, an IRA LLC can be a great benefit because what happens in the IRA LLC, as you can see in the diagram, is the IRA will invest its cash into an LLC. This is a newly created LLC that has specific terms in here with respect to the IRA, and that LLC will have a bank account. It'll deposit the money from the IRA in the LLC bank account. The LLC, in turn, will go out and purchase the property. So now the LLC is on the contract. The LLC is what closes in the name of the LLC, and the LLC is who gets rental income and who pays expenses. The nice thing about that is you're going to have more control, and you're also going to have you're going to be able to execute transactions more easily through the LLC as opposed to going back and forth with your third-party administrator or custodian. So the way it's diagrammed out here is how it works. It's a two-step process. The IRA invests its cash into the LLC. The LLC has a bank account that should only have the IRA's money in it. You shouldn't commingle personal money or anything like that. The LLC then goes out and purchases the property. Now I'm going to talk about being manager of the LLC. That's an important component of the IRA LLC structure. Is in a lot of instances, the IRA owner wants to be the manager of the LLC. Now that's okay. However, the LLC documents have to have numerous restrictions included in them if the IRA owner is going to be manager of the LLC. Now, manager of an LLC is like president of a corporation. The manager of the LLC is the person who signs on behalf of the company. So when you're doing the contract to purchase the property, when you're making an investment out of the IRA LLC, when you're receiving income, you're the person who has authority on behalf of the LLC to do things. So you'll do things as manager of the LLC. So for example, if you're signing at closing on a property and you're signing John Smith, you're signing for the LLC, but you're signing John Smith as manager of the LLC. In this example here that I have shown, it shows the IRA owning the LLC 100%. That's important because in this situation, which is probably the most common, this diagram, it's probably the most common way to set up an IRA LLC, the IRA owns it 100%, which means there's no tax return required. LLCs have to file tax return if there is more than one owner. It becomes a partnership for tax purposes. But the IRS specifically said if there's one owner of an LLC, we do not require a tax return. So from a year-to-year standpoint, what you'll have to do is keep the LLC active with the state. You may have state renewal fees. Some states are expensive, like California, that will charge $800 a year. Other states are more affordable, like Arizona, where you pay to set it up and you don't pay year to year. It's a pretty good deal out here. But there's no tax return required in this structure. Just need to keep the LLC active with the state. And there are some caveats, by the way, state to state on this, but I'm trying to just give you the general outline here from a fee standpoint and keeping the LLC active. Now, Jared a little bit earlier talked about the prohibited transaction rules. I just want to kind of restate that just briefly here because it matters when we talk about what you can do and how you can structure. I'm going to go through what you can do and how you can structure it. Now, as I said earlier, a lot of times it's not the logical way. I have a lot of clients who do real estate outside their retirement plans, and they have a way of doing things. That way of doing things may not be the way you're going to be able to operate this IRA LLC. So there's restrictions on this, so you got to be careful that you don't violate the rules and you're aware of the restrictions. Also, as we look at how to structure it, it all relates back to the prohibited transaction rules. So we're structuring things in a way to make sure we're not violating these rules. We're not structuring in the way we think is best necessarily. We're structuring them because of the prohibited transaction rules. All right, so there's a code section called Internal Revenue Code Section 4975. This is where the prohibited transaction rules are located. And when you think about a prohibited transaction, there are two components to a prohibited transaction. One, there's a transaction, and the code defines what constitutes a transaction. And two, it's that transaction is with a disqualified person. Now, a disqualified person includes the IRA owner. It includes the IRA owner's spouse and kids and their parents. Also, any companies you may own or prohibited people who are disqualified, own 50% or more, are also disqualified. So that means you cannot engage in transactions between yourself and the IRA. Now, this also applies to the IRA LLC. So the prohibited transaction rules are the same for an IRA LLC as they are for your IRA. You do not have any things you can do as a result of the IRA LLC to get around the prohibited transaction rules. So if I'm prohibited from renting property my IRA owns to my kids, my IRA LLC is also prohibited from renting a property to my kids. So the prohibited transaction rules are going to apply to the IRA LLC in the same way they'll apply to the IRA. The other rule to keep in mind is there are what are called direct prohibited transaction rules, and there's some conflict of interest personal benefit prohibited transaction rules. Essentially, in the conflict of interest personal benefit prohibited transaction rules is you just need to know you cannot personally benefit, nor can any other disqualified person like your spouse or kids personally benefit from an IRA's assets or investments. For example, I have down here, you can't buy a vacation rental stay in the vacation rental 1 week yourself while renting it out the 51 other weeks, even if you paid the same rate you charge people the 51 other weeks. So you're personally benefiting from the retirement plan's investment. Whether you don't pay or do pay, it's a violation of the rules. And there's other instances where that can apply as well. For example, let's say I'm a real estate broker or agent and my IRA LLC buys a property. Can I get a commission for purchasing the property? No, you're personally benefiting now from your retirement plan's investment. Now, some other agent or broker that's not family and prohibited could receive a commission, but you personally and anyone disqualified to your IRA cannot receive a commission because that would violate the personal benefit rule. All right, let me jump to IRA Owner as Manager. One of the key parts of this structure, as I mentioned earlier, is that the IRA owner can be manager of this IRA LLC. It's not necessary, but it's probably the most common option. When the IRA owner is the manager of the LLC, there are restrictions on what you can and cannot do. So let me first talk about what you can do, then I'll talk about what you cannot do. What you can do is you can essentially perform administrative functions and investment oversight tasks. What that means is you can sign contracts on behalf of the LLC as manager, you can pay bills, receive income, make investment decisions, hire people to work on properties. And I'm talking about real estate here. This could apply to other areas, but I'm just trying to keep it simple and talk about real estate. But you are able to sign a closing. All those things can be done by you as manager of the LLC, and those are investment oversight or administrative functions. You're essentially being able to carry out what an investment is. And there's no firm definition on what is administrative in nature. Frankly, it is just what the cases have came down in revenue rulings, what's crossed the line and what hasn't. So what I have up there are clearly administrative functions in the slide, but let me talk about what is not an administrative function or investment oversight and is something you cannot do as manager of the LLC. You cannot pay yourself or a disqualified person like your spouse or kids to be manager of the LLC or really even to perform services at all. So there's no check you get for being the manager or management fee that you receive personally as being the manager. You also can't personally benefit from the LLC's investments. I talked briefly about that previously. So as your capacity as manager of the LLC, you're doing administrative tasks and investment oversight. You're not getting personal benefit out of the LLC's assets, like using those assets or receiving personal compensation from those assets or commissions. You cannot commingle personal funds with IRA funds in the LLC bank account. The IRA LLC is going to have a bank account. It's just a regular LLC bank account, whatever bank you want to set it up at. And you'll get a check from the IRA account that you'll deposit into the LLC bank account. Or sometimes you can also just have it wired from the IRA into the new LLC bank account. But you should not have personal funds involved in there. You don't want to deposit personal funds, nor can you pay personal expenses, nor should you use personal money to pay for expenses that the IRA LLC should be paying for. So if the IRA LLC owns a property and the property has utility bills, the IRA LLC should be paying for those. You should not personally pay for those. Or insurance on the property. If you have a property insurance policy, the IRA LLC should pay for that. Don't pay for it personally. You really have to think of this IRA LLC as separate from yourself personally. Treat it differently than you treat even your other LLCs if you have those for your personal investments that you personally own. This LLC bank account needs to be treated like retirement plan money and don't put personal money or pay personal expenses. You'll violate the rules if you do that. If you shift, there's something that comes up a lot, and I think this goes without saying, but the IRS has been very proactive about advocating that you cannot unfairly shift income to yourself or to a disqualified person through an IRA LLC. What that essentially means is you cannot create the IRA LLC and then transfer ownership to yourself personally and try to then personally receive the income as opposed to your retirement plan. That would obviously violate the rules, but I just include that because it's been in some pronouncements by the IRS recently. I don't really have clients asking me to do that, but I just want to make sure we're all clear that that's not an option. Let me just look at some of these questions here as they're coming up as I go through the slides. If you do have questions, you can put them into the chat window. I'll try and restate them so everybody can hear them. There's a question about providing services and whether it conflicts with 4975 and providing services to your IRA. Well, I'm not certain I understand that question fully, but there are obviously certain things you can do with respect to your IRA and tasks you can perform for your IRA for managing the IRA. But what we're talking about here is managing an investment of the IRA. An investment of the IRA, you're going to have a lot more restrictions on what you can and cannot do. So this becomes, the IRA LLC becomes an asset of the IRA because the IRA LLC is the investment. So that's why you're going to be restricted here on under these prohibited transaction rules. You're not going to be able to do things for an asset or an investment of the IRA, which is what the IRA LLC is. There's a question here about unfairly, what's an example of fairly shifting income to yourself? There is no example of fairly shifting income to yourself. What happens is the IRA LLC is going to receive the income. Let's say it's rental property and you're receiving cash flow on the property. Or you sell a property and the profits from the sale go into the IRA LLC bank account. Now the LLC bank account, you can't take the money personally, so if you ever want to take the money personally, you'll send the money from the LLC back to the IRA, and then you take a distribution from the IRA. That would be, I guess, fairly shifting income to yourself. You personally, you can't skip the IRA. The money's always got to go from the LLC to the IRA, and then it's a distribution from the IRA. And if it's traditional, it's taxed. Obviously, if it's Roth, it's not taxed. So that's how the process works. Money doesn't go into the LLC except through the IRA. Only the IRA can contribute money into the LLC. And then when money comes out to you personally, it's got to go back to the IRA, and you take a distribution from the IRA. And you'll really just write a check from the LLC back to the IRA account, send it to your administrator, and then they will process a distribution to you personally. And there's obviously going to be some forms in that process. I'm going to go through a couple of structuring options here on how you can structure an IRA LLC. Some of you may be familiar with non-recourse loans. Whenever your IRA obtains a loan for an investment, you cannot personally guarantee that loan, nor can your retirement plan guarantee that loan. So there are types of loans called non-recourse loans, where essentially you receive a loan on an investment like a piece of property, and you're supposed to pay it back, but if you default, the recourse of the lender is to take that property. For example, on real estate, they would foreclose and take the property, but they won't pursue you personally nor the IRA for any deficiencies on that. Because of the IRA rules, that's the only type of loan you can get, a non-recourse loan. It typically requires 30 to 40% down because there's more risk to the lender there since they can't pursue you or the IRA. And it has to be an income-producing asset or income-producing property. So if my IRA LLC or my IRA is buying a property that is that I need a loan for, I can get a non-recourse loan, but it would have to be a rental property such that I could get, and it could be commercial, residential, single-family, multifamily, condos, doesn't matter. But it couldn't be like a piece of raw land that doesn't produce income. That wouldn't qualify. This diagram here, I'm just showing one variation at a time as we go through the structuring options. What I'm just indicating here is that you can still use a non-recourse loan with an IRA LLC. So in this scenario here, the IRA invests into the IRA LLC. And let's say in this scenario that you wanted to buy a $100,000 property, but you only had $60,000, or let's change it up, sorry. Let's say you wanted to buy a $100,000 property, but you only had $40,000 in the IRA. Well, you could get a non-recourse loan to fund the other 60% and then purchase that property for $100,000. So that would be how this structure and diagram would be used here. The IRA is going to essentially be funding a significant portion of the down payment, and the non-recourse loan funds the balance to acquire the asset. In this example here, still the IRA owns the LLC 100%, so there's no tax return. But there is an issue of tax called UDFI tax, which I'm going to talk about here at the end. But UDFI tax, if you do ever get loans, a non-recourse loan, and you leverage your IRA's investment, the IRS wants to charge tax on the portion of proceeds that they attribute to the debt. And it's a super complicated definition, but essentially what you got to think about is, if I bought that property for $100,000, $40,000 came from my IRA, $60,000 came from a loan. In the IRS's eyes, 40% of the returns or profits are IRA non-taxable profits, so they go back into my IRA. The other 60%, as far as the IRS is concerned, that is not retirement plan dollars. There's never tax paid on that money yet. So they're going to charge tax, which is this UDFI tax, on that other 60% of profits that come through. So when you do leverage, that money can all go back into the IRA, but the portion of profits that come from the leveraged part of the investment gets taxed. And I'll speak a little bit more about it here at the end, though, but that's the basics of how the UDFI tax applies. Now, one side note, if you have a 401k plans are actually exempt from UDFI. It's a weird provision in the tax code, but it's a benefit. If you do have a 401k, you don't have to worry about UDFI tax. And I'm going to come back to some of these questions. If you've asked some questions in the chat window, I'm going to come back to them here. I'll be covering some of them throughout the presentation here, but I'm going to come back to some of those at the end here. So I will take the questions at the end. But let me just get through these slides. I think I'll cover a couple of those in the chat window. Those I don't, I'm going to come back to at the end. But if you do have questions, you can put them in the chat window. I'll restate them for everybody. We'll answer them here at the end because I can't keep track of them as I'm going through here right now. There is an option here, and this is on the slide, where you can have multiple IRAs in an IRA LLC. So I could have, for example, my Roth IRA and my traditional IRA in one IRA LLC that goes out and then purchases a property. Or I could have my IRA and my spouse's IRA in an IRA LLC that goes out and purchases the property. And again, this could be a health savings account or a 401k, whatever. I mean, we call it an IRA LLC because that's typically what it is, but it could be any of the types of accounts that you can self-direct. But in this scenario here, what we do is if we have multiple retirement accounts as owners of the LLC, we will break up the ownership of the LLC based on the dollar amounts invested from the IRA accounts. So let's say I did an IRA LLC between my spouse and myself. Let's say my spouse's IRA puts in $70,000. My IRA puts in $30,000. When we allocate the ownership for that IRA LLC, we're going to put 70% ownership to my spouse, 30% ownership, 70% ownership to my spouse's IRA, I should say, 30% ownership to my IRA. And we just break it up by ownership percentages there. Now, there's some pluses and minuses to combining retirement accounts into one IRA LLC. Obviously, the benefit of doing that is I have multiple retirement accounts owning the LLC, and I can pool the money together. So if I couldn't buy a property or an asset with my funds from my IRA separately, I can combine mine and my spouse's or some other parties. It could be, your parents or kids or brothers or even a non-prohibited or disqualified person. It doesn't matter. But we can combine those into one LLC that then allows a pool of funds to purchase the investment. The downside is once I have more than one retirement account as an owner, even if it's husband or wife or my Roth and my traditional, once there's more than one retirement account as the owner of the LLC, it is now a partnership for tax purposes, and the LLC has to file a 1065 partnership tax return each year. So that is a downside. You will have to do a partnership tax return. It's likely there will be no tax due unless you have UDFI tax or some of these other taxes that can apply in non-frequent situations. But if you do have a more than one owner in the LLC, it is a partnership, and a partnership tax return will be required. So that is a negative. The other negative is if I have the scenario I gave where we have 70% of the money came from my spouse's IRA, 30% came from my IRA. If I want to make additional contributions into that IRA LLC, there's a lot of discrepancy and differences of opinion on this. But if you want to make additional contributions of funds into the IRA LLC, the only way it is acceptable, and some places won't even accept this, but the only way it is acceptable is if you do it in a pro rata way, which means if I have, let's say I need 10 grand. Let's say there was some unexpected repair or something happened in the property, or I had tenant out for longer than anticipated, so I need money in the IRA LLC to cover something. If I needed $10,000, I would have to have my spouse's IRA contribute $7,000 and my IRA contribute $3,000 because I have to contribute based on the ownership percentages. We can't both put in $5,000. That would cause a prohibited transaction between the retirement account. So, but that's a complicated thing to pull off, just so you're aware, but that's a downside. When you do need to put more money in, it's a little more difficult when there's multiple owners. If you're in the scenario where you have one IRA that owns the LLC 100%, you just have that IRA put in more money. It's easy. You don't have to worry about what the other person's putting in and their ownership percentages. So it's a lot more easier to pull off when you just have one IRA owning the LLC. And looking at just one of the questions in here, do we let contributions be made to 100% owned IRA LLC even though the LLC could be deemed a disqualified person entity? Yes, we do allow that. There is a revenue ruling from the IRS about that was done maybe 10 years ago that has said that is not a prohibited transaction. So our opinion has always been that that would not constitute a prohibited transaction. However, that is specific to 100% owned situations where the IRA owns the LLC 100%. An additional funding from the IRA into the LLC we believe is not prohibited, and that's relatively easy to pull off. All right, let me jump to the third structuring option here, and this is where it starts getting complicated, and the formatting of my slides kind of got a little messed up here, so I apologize for any overlapping as I loaded them up here for the webinar. But this option here, the only thing I'm adding from the last slide is a non-retirement account investing with the retirement account. Now, in this situation here, and this is the most complex to understand, and it's also the one that has the most caveats about, well, it depends, and so I'm going to try and be very basic about this, but this is one if you're, oh, slides are jumping around here. I don't know what happened here. Let me get back to the slide there. All right. If you're in this structure here where you're going to have multiple retirement accounts and an individual non-retirement account involved, you've got to make sure you get some advice about how this can be structured. So, but what I have here is, let's say we have two retirement accounts investing cash. That's all a retirement account can do, right? It can't provide services or credit or anything. All it can do is put in cash. So it puts in cash to an IRA LLC. Let's say there's some other individual, though, that wants to put in they want to put non-retirement plan dollars in. They just want to invest regular cash. That can be structured in an IRA LLC like this. Again, we break up the IRA LLC based on the amount invested. So let's say each retirement account and the individual are going to each put in $33,000. Okay, we're going to break up the ownership between 1/3 between each of their retirement accounts. And that individual investor could be a disqualified person. Now, there's a lot of caveats to that I don't have enough time to explain here, but there's something called an enabling prohibited transaction you have to think about and that needs to be reviewed as you're talking to an attorney or someone advising in this type of structure. But it is a possibility. But essentially what the rule is that the retirement plans cannot be enabling you to make a personal investment. So there's just some factors that have to be reviewed if you're going to do that, where you're personally investing with your retirement account. Another variation of this structure could be multiple retirement accounts plus a third party. Let's say you have your retirement accounts and you want to invest with some other real estate investor who is someone who kind of does the deal, and maybe or it's like a contractor that fixes the property, whatever the case may be. You can partner where the IRAs are investing the cash and this other individual is doing services. And then the IRA LLC goes out and does whatever the real estate deal is or the transaction is. Now on that structure though, that individual person who's providing services cannot be a disqualified person. So that could not be me or my spouse or kids that are the one providing that services. That would have to be a third party that is not prohibited to the retirement account that invest their cash. There's lots of other options that can be undertaken here, but these are the primary options I typically review, and the primary ways people will structure these. As I said earlier, make sure you're getting advice about each of these structures so you're aware of what can and cannot be done. All right, let me jump to the frequently asked questions here. These are questions I always get regarding IRA LLCs. So let me just start at the top and we'll go through some of the questions that are in the chat window. If you do have a question, feel free to put it into the chat window. I will restate it for everyone else and then try and do my best to answer it. The first question is, and this is one of the most common, can my IRA invest into an existing LLC? A lot of times someone will set up an LLC themselves, and they may not have even used it, or it's one that they've used before, but in any event, your IRA cannot invest into an existing LLC unless that LLC was set up properly and that retirement account was the owner. In most situations, the LLC is going to be prohibited to the IRA because you were listed personally as the owner, and that will then amount to you transferring your ownership to your IRA, which is a prohibited transaction. So that's kind of an easy case for the IRS, frankly, on a prohibited transaction. So we stay away from that and will typically set up a new LLC with the IRA owning it from the outset. And that's an important part. There's a lot of cases about IRA LLCs. There's a case called the Swanson case, and it was very clear in that case and some of the other cases since that case that this structure only works on a newly formed company where the retirement account takes ownership at the time of formation. And that's an important rule to avoid a prohibited transaction. So you cannot invest into an existing LLC if the IRA was not listed as the owner from the very beginning. What is the difference between an IRA LLC and a typical LLC? Both of them are LLCs. They both operate like LLC. As far as your banks, title companies, and people you operate with, it's just an LLC. The IRA, though, is going to make some significant differences in how you personally operate it. There's going to be provisions in the IRA LLC that are going to prohibit certain things. It's going to prohibit it from engaging in a prohibited transaction. And there's a lot of terms in a typical operating agreement for an LLC. When you establish an IRA LLC, Next Generation will, and every custodian does this, administrator runs you through this, but they make sure you have the right documents in order before that they will fund it. So there's got to be an operating agreement. It has to have specific terms in the operating agreement regarding the IRA. But there's terms in there that are going to be very different than your typical LLC operating agreement. For an example, a typical LLC operating agreement is going to say the members can pay the manager whatever compensation the members decide upon. Well, that's a prohibited transaction if that's in your operating agreement. So you cannot have that. By the way, the IRS would deem that prohibited whether you actually did pay the compensation or not, because you allowed the LLC to engage in a prohibited transaction. There's been a couple of instances where the IRS's intent to declare a prohibited transaction is clear in that scenario, even when someone doesn't do a prohibited transaction. So you need to be careful there. But there's a lot of other sections that are going to be different than your typical LLC operating agreement. They're all a result of the prohibited transaction rules, or I should say 90% are a result of the prohibited transaction rules, and making sure that the IRA LLC does not engage in a prohibited transaction. Can I take distributions directly from the IRA LLC? I mentioned this briefly earlier. The only way you personally get money out of the IRA LLC is the LLC sends money back to the IRA account, and you take a distribution from your IRA. Do I still need the IRA once the IRA LLC is set up? I have some confusion from clients about this occasionally. You must have an IRA at all times. So you will always have an IRA in Next Generation. You're not going to set up the IRA LLC and then close out the IRA account. The IRA still stays there, and the IRA LLC is just the investment that the IRA has invested into. What is the cost to set up an IRA LLC? Our fee is, we feel, very reasonable and competitive as far as what you'll see in the industry. It's $750 for a IRA LLC where one IRA owns the LLC, plus whatever state filing fees may apply in the state we set it up in. And we'll typically set up the IRA LLC in the state where you're going to be making investments. So if it's buying a property, we're going to set up the IRA LLC in the state you intend to buy properties. If you have multiple owners in the IRA LLC and some of the other structures I showed previously, where there's more than one IRA or there's multiple IRAs and an individual, or one IRA and an individual, in those scenarios the fee is $1,500 plus state filing fees. Requires some additional work and other people that have to be consulted. So our fee is a little bit different in that scenario. So $750 our fee if it's just one IRA, $1,500 if it's multiple owners in the LLC with the IRA. Now let me go over these two taxes that can apply through in an IRA or to an IRA LLC. And I should never end on this. I don't know why I always put this in the end, because sometimes it's not the fun part of the presentation. But there's two taxes: UBTI tax and UDFI tax. UBTI tax is called, it's unrelated business taxable income. It's a somewhat complicated tax to understand, but essentially what it is the IRS's position and the tax code position is that your IRA can make investments and not pay taxes on the gains so long as they're passive investments. So if I want to invest in a publicly traded company and buy Coca-Cola stock, that is a C corporation. My ownership is deemed passive. The corporation pays taxes on it before they distribute the money to me. If I want to buy a piece of real estate, that's passive. I get rental income on the property, and then when I sell it, I get capital gain income, all passive. However, if you invest your IRA in an active business that does not pay corporate taxes, then your IRA can be subject to this UBTI tax. A real estate development is a common example and a pitfall you have to be careful about. If you're wanting to do some development activity where your IRA is invested, you need to be very careful to follow, obviously, the prohibited transaction rules, but you obviously need to be careful about this UBTI tax, because that could apply if that is deemed to be not passive investment activity and it's deemed to be active or ordinary income. Also, if you invest in a small business, for example, like a restaurant or something that's an active or ordinary business that does not pay corporate taxes, like let's say it's an LLC that owns a restaurant and there's no corporate taxes being paid, then your IRA can be subject to UBTI as well. Typically, if you're in the most passive investments of loaning money out of the IRA LLC, I have a lot of hard money lender clients who use an IRA LLC to loan money, or you're buying rental properties, or you're flipping one or two properties a year, you're not flipping a lot of properties, you're not going to have to worry about UBTI tax with your IRA or IRA LLC. UDFI tax I explained a little bit earlier. This arises when you leverage an IRA's investment with debt. I talked about the equation on that earlier. Essentially, again, what the IRS does is they look at how much debt is on the property and then how much cash the IRA invested, and they're going to tax the portion of profits attributable to the debt. If you do have UBTI or UDFI tax, a tax return does need to be filed for the IRA. It's a 990T tax return. Somewhat complicated. It's not something you'll necessarily get done at H&R Block. So the key is typically to avoid these taxes, or if you know you're going to incur them, you just got to analyze the investment and just understand these are some of the costs to it. That it's not going to be a totally tax-free or a totally tax-deferred structure that you may be used to in the IRA. All right, let me run through here in the chat window to answer any questions here. If you have questions, like I said, feel free to put them in the chat window here.
Matt, thank you so much for that unbelievable information. I know that you took most of the questions. You may have skipped a couple of them. If he did skip your question, please copy it and make sure to type it again, and I'll make sure he gets to all of them. So I'm sorry if we skipped any of yours. Please just reach out them. So we'll give it a couple minutes for the people to take all of it in and see if there's any other further follow-ups that we can do.
Okay. Here's one question I see that I didn't answer. Once the IRA LLC is set up with the custodian, does the custodian have to review the following real estate purchase documents, mortgages, etc.? The answer would be no. So when the IRA LLC is set up, the custodian is going to review the IRA LLC documents because that's the investment the IRA is making. Once the money is in the LLC bank account, the custodian is not reviewing the transactions that the IRA LLC is making. Now, you still are subject to all the prohibited transaction rules, and you're going to have to indicate that you're going to follow those. Our documents, we make you sign something that says you're aware of the rules, and we define them in our documents we send you and give you a memo and a do's and don'ts guide and such to make sure you're following the rules. But you're not having to have your custodian review those transactions that are being made out of the IRA LLC. But keep in mind, they're still subject to the rules, so you have to stay in compliance with them. Here's another question I didn't answer. If my IRA already owns a property, is there a way I can get it into an IRA LLC? Yes. What we typically do is set up the IRA LLC, and your IRA will contribute a certain portion of cash that's in the IRA because we need to have a bank account and such to cover expenses on that property. But then it will also contribute the property, and we'll end up deeding the property from your IRA account into the IRA LLC. So that's possible. We just do a contribution of cash and the property. And obviously we'll need information on the property as well because the deed will need to take place.
Did you take this one? Do you agree that minor items like changing a light bulb is really considered a prohibited transaction? Is that really considered a contribution to your IRA?
Okay, yeah. If you read the prohibited transaction rules, we believe it does violate the rules. However, I don't think the IRS frankly cares about that. They're not out policing someone changing a light bulb. But let me just explain why the IRS cares about it so you know, is that if an investment in your IRA has an expense to it, they want the IRA to bear that expense. They don't want you to personally bear the expense, nor do they want you to personally help the IRA avoid that expense. So you going and changing the light bulb when your IRA would otherwise have had to pay a property management company or handyman to go do that would technically violate the rule. So now, does the IRS out there auditing people or asking people about that? No. Is it technically a violation of the rule? Yes. So, it's something I just advise a client, just don't be doing that. I mean, sometimes I have a client who says, well, I'm at the property and there's garbage here. Can I pick up the garbage? Yes, I don't think the IRS is out policing that. But, and nor do I think even if you told them you were doing that, they would raise that case. And I've been in tax court with the IRS on prohibited transaction cases with self-directed account owners. But I just don't see that they're it's technically a violation, so I just say don't do it. But I understand people's frustration about, what do I do? Is the IRS going to really audit me and declare a prohibited transaction? No, but I'm advising clients because of the law says you're not supposed to. You're not supposed to do it.
One question I see here, can my Roth IRA loan money to my inherited IRA from my father, and I guess that Roth IRA, I'll be able to take that. Unfortunately, you cannot. What they would be able to, you cannot loan money from your personal IRA to an IRA that's now technically considered yours as well, but you are able to do certain things like partner them together. If you're thinking of doing an LLC, you can certainly partner those two together in order to fund that investment.
Exactly. I'm on the same page there. That's good to hear. All right, I'm just going through the chat one. I don't know if there's anything else in here we might have missed.
I know you were confused a little earlier with a question, and the individual restated the question. Administrative services to an asset owned by the IRA versus to the IRA itself, are they viewed the same?
Yeah, I think it would be the same. What you could do with your is, now that the issue is see, if I own the IRA and sorry, if it's obviously my IRA and the IRA owns a property, for example, there's certain things I just cannot do though from a transactional standpoint, because I can't sign on behalf of my IRA. I have to go through the custodian who signs on behalf of the IRA. From the IRA LLC standpoint, I can sign for things as manager of the LLC and do certain things. So it's usually more of an issue with the IRA LLC and making sure you understand that. From the IRA standpoint, you're not able to do most of the administrative things anyways, because it has to go through the custodian for them to sign off on it. I mean, obviously you're facilitating that, but the IRA LLC is where it's more of an issue, where I think you got to be careful about not doing too many things, such as going to the property and rehabbing the kitchen. That falls out of administering the investment and administrative tasks. That's more improving the asset or improving the investment, which would obviously violate the rule.
Wow, a lot of great questions coming in from Ted. Hi, Ted. How's it going? Would providing the bookkeeping for the IRA LLC be considered self-dealing, therefore prohibited?
I don't think so. I don't think keeping track of the own books and stuff would be prohibited. Now, if you have a lot of investments in there and it's amounting to a significant investment of time, it might cross the line. But there is a prohibited transaction exemption for accounting services and attorney services. So I think from keeping track of the numbers that you would not be violating the rules in doing the bookkeeping.
How about the next one? If you don't think I should pick up trash, how can I do accounting? So I guess it's a follow-up to the question before regarding changing the light bulb, and is that considered being prohibited?
Yeah. This is an important example of you can't think logically about the rules. So if I say you can do one thing, don't take a logical interpretation of that to say you can do something else, because the rules aren't logical. So I understand the nature of the question, but there's a prohibited transaction exemption for accounting services and legal services for the retirement plan. So I'm more relying on that and saying what you can do from a bookkeeping standpoint. Also, just from experience being in tax court, a lot of people, keep track of the numbers themselves, and I don't see the IRS, raising a flag about that. They like that, actually, as opposed to mismanagement of what the numbers are. So I think there's just a really more of a rule distinction and exception in that area, as opposed to the asset of the retirement account, that might need services performed on it, like being cleaned or being maintained, versus keeping the financials that has an exemption in the rules for it.
Can my IRA invest in an existing LLC in which a disqualified party owns less than 50% and that disqualified person is the manager?
Good question. That scenario, there's two things you got to keep in mind. One is, who is my IRA buying the ownership from in the LLC, because presumably there's multiple owners in that LLC. And then secondly, who is approving that transaction? Now, if a disqualified person is the manager of that LLC, there's been plenty of cases, and the IRS deems that to be a conflict of interest transaction, such that if a disqualified person is the manager of an LLC, even though the LLC is majority controlled by ownership, by 51% or more by non-disqualified parties, from the IRS's perspective, they still consider that a conflict of interest privilege transaction, so that any transaction that LLC does with a disqualified person would be prohibited. There's been a few cases about that. What I would say in that scenario, there might be a way to pull that off. The disqualified person would need to be removed as manager, and the IRA owner could purchase ownership in the existing LLC so long as it's from someone who is also still disqualified. And then we want to look at what the ownership percentages is after that IRA purchases, and then we could maybe talk about a disqualified person becoming manager after and having management authority. But that's a complicated one. I would just say as it's presented right now, I would say it wouldn't be advisable and could be pulled off, but might be a way to restructure the company to allow it if that's possible between the owners and management. So let me ask, I can answer this one from Robert that I just saw come up. Please clarify why the answer regarding loaning money between IRAs. I don't understand how they could partner but couldn't loan money to one another. This is the reason why you couldn't have your Roth IRA loan to a inherited IRA of yours is because those IRAs are both prohibited to each other, and the loaning of money between those IRAs is a transaction. Therefore, that's a prohibited transaction. Those IRAs are disqualified. A loan is a transaction. Now, IRAs investing together, such as an LLC, there is no transaction taking place between the IRAs. They're both investing in an LLC, presumably at the same time, so there is not a transaction taking place between the IRAs.
About the next one that just came in. Can you be the manager of the property owning LLC, which is less than 50% owned by your IRA LLC?
All right, can you be the manager of the property owning LLC, which is less than 50% owned by your IRA LLC? Possibly. This might get into the same issue of a conflict of interest privilege transaction. If you have an IRA LLC that then invests and owns 49% less of another owning LLC, I need to know who the other owners are, and but it's likely to be a conflict of interest privilege transaction if your IRA LLC invests into another LLC that owns a property, for example, where you are a manager of. On the Robert's question, I think this is about the inherited IRA privilege transaction issue. It's prohibited because it was my dad's, and therefore a direct descendant. What happens with an inherited retirement account is if you are the beneficiary of that account, you apply the privilege transaction rules to you, not to the original account owner who would be deceased. So for an inherited retirement account, you got to look at you yourself as being now prohibited to that. your spouse, your kids. I mean, those are the prohibited rules you'd want to apply to the inherited account, because you are technically now the beneficiary of that account and are from a fiduciary standpoint, you're the one directing it.
But it's still separate, so that's why you would be unable to, move those funds into your current IRA account or loan money to that. It's still a separate account that you can't mix together. However, they can partner together even though they're disqualified.
Yep, exactly.
So I think we got all of the questions. We just went a little over our time. That's no big deal. Thank you so much, everyone, for attending. We'll, I guess, wait another 2 minutes or a minute to see if anyone has any questions. Matt, why don't you give away your contact information in case anyone wants to follow up with you? Sure.
You can reach us at the number here in Phoenix is 602-761-9798. You can go to our website, kkoslawyers.com, for more information about our firm. For more information about me and my blog and some information I have more about self-directed IRA issues, and I have some articles about, you can go to Matt with 1T, M-A-T-N, Sorensen.com. The information's on the slide. Be happy to help you in any of these areas. Just so people are aware, too, we do give a 15-minute interview for clients if they want to do an IRA LLC or something like that to see if it's something that works for them. And that's just a free interview that we don't charge for. If you do need advice, though, we do, and you need more of a consulting type call, we require a retainer for that. But that's our contact info. We look forward to working with anybody who may be interested. Thanks again so much, Matt, and we'll leave it at that. Again, if you have any questions, you can reach out to me, Jared, the number here, 973-533-1880, or you can reach out to Matt at the phone number that he gave. Thank you so much, everyone, and I look forward to hearing from you.
Thank you. Please stand by.